What's going on, Tim Quast? How we doing?
Good morning, guys. Are we sure? Well, there's plenty going on. Are we sure it's everybody's favorite? That could be
Hey, hey, hey,
presumptuous.
hey.
Mitch,
I think it's
nice,
everybody's
nice to
Our
favorite,
see you.
at
favorite.
least.
I
It's
appreciate the
everybody's
dentist
favorite.
dance. Yeah.
You
Yeah,
know,
the
and this.
Bushwhackers. I hadn't brought it out in a while, so Mitch said it, so I had to do the Bushwhacker dance. I don't know why I started making market structure a Bushwhacker thing, but I love the Bushwhackers, and I love Market Structure Edge, and I love Tim Quast, so that's why I do the dance.
Back at you. Thank you, Dennis. Good to see you guys.
What do you
So
see,
we're not out
Tim?
of the woods.
Yeah.
No. Well, yeah. So it depends on what woods you're referring to, Joel. But if you're talking about the expirations cycle, uh, we tend to here we think about the expiration cycle as encompassing the whole series, not just what happened on Friday. We could talk a little bit about that. So Friday was what we used to call quad witching, and Dennis, you might know better than me. There aren't very I don't know, are there any single stock futures that are exchange traded? I don't know that there are, but anyway, it's when stock and index options and futures expire. There were S&P S&P Standard and Poor's index rebalances, all of that on Friday. But there were things on Thursday. And then today, the new series trades. I mean, to us, this is a very important day because you get to benchmark whether money is recommitting to its leverage, hedges, substitutes. So we watch that pretty closely. We like to call Tuesday Counterparty Tuesday because all of
Yep.
the banks who traffic in that will square the books. I mean, they won and they lost, and they're going to have to square the ledger. And then Wednesday, as the Fed does or does not do anything, probably nothing, VIX options expire. So to us, the whole period extends from Thursday through Wednesday. It's not always that way. This is one of the expirations periods where it's split into 2 weeks. But I think that promotes arbitrage. And the way we prove it is we look at the behavioral changes. And if there are behavioral changes in what we call risk management, the presence of counterparties associated with equity trades, we can get a pretty good read on that. So no, I don't think we're out of the woods until we get to Thursday. Then we'll know what reality is. Until then, all of it is in some way or another impacted by what I would call index arbitrage, statistical arbitrage.
And you're even looking a little bit farther than that, right? Because we can get through
Yep.
the expirations, we can get through the early part of this week, but a week from Friday, what do we have? Quarterly S&P imbalances, too. I mean, or the end of the quarter.
End of the
There's going to
quarter.
there's going to be some
Yeah.
some jockey in there. So,
Right.
so I guess you're even looking beyond Thursday of this week to perhaps look for our next key in the market.
Yeah, maybe. It's I will. I'm going to lean on some data from our market strategist Brian Wilson, but he compiled some really interesting data that he circulated this morning. And in the last week, interestingly, passive flows were up proportionately from the preceding week, 6.2%, as the market struggled. To me, into an index rebalance, that may suggest that global macro money has reduced its exposure to equities. It's always hard to tell. Algorithms are designed to deceive. And there are great clouds of orders that are put out, and 95% of them are canceled. And in behind all that stuff, things change. And to us, looking across the market, passive money has dominated for the last 30 days. I mean, it's a very dominant force anyway. But I could draw two conclusions from that. One, probably passive money has reduced its exposure to equities. Number two, then, what happens at quarter end? Do they recommit? I think it will depend on the data. So we'll find out. But maybe we head into October and we have a nice chance to trade the market up. I don't know. We're going to see. I fully expected the market to decline on Friday. So on Thursday, when the Dow was up 350 points, I put on my largest short that I've ever done. And so I short SDS and SPXU. So they're
Oh.
leveraged ETFs. And so I had my best trading day on Friday since June. I made 3% on my
That was a great
portfolio
call.
on Friday. And he'd
Big
say,
day.
well, what? That sounds like gambling. No. I am the last thing I am is a gambler. I'm all about the probability. So when I look at falling overall demand, very high supply, the passive money reducing its exposure to equities, and options expiring on Friday, and index options expiring on Thursday, I could conclude that there was index arbitrage. You would on Thursday drive the market up so you could dump your options that responded to that. So there was a high probability the market would give back those gains. So it worked out. Doesn't work out every time, but the key to me, traders, is you don't just guess. You want the data to be in your favor. Don't take chances. Just say, well, if I can get 4 or 5 things are working in my favor, that's a pretty good opportunity. That's how I
Ducks
think.
in a row. Let's bring
Yep.
up Market Structure Edge and let's look at what you're seeing in the data for this next coming week here, because we bring you on early Monday morning before the Monday morning actual trade starts to get a feel for how this week is looking. So bring up the data, talk to us about what's going to happen and what you see potentially happening this week.
Okay.
Yeah, I love Market Structure Edge. To me, it's like kind of like when you're watching poker and then you see the percentages on the side. It's like knowing the other people's hands, right? Let's take a look. What is it showing, Tim?
That is exactly the way I think about it, Mitch. This is what
Stop. I'm looking at the top left corner.
Right.
No companies in the momentum. I've never seen that since you've been coming on the show. I've never seen not even one company. Not even one company in the momentum filter.
There is not a single stock in the momentum portfolio. But
oh my gosh, this is not if you ever thought we were in a contrarian market and not in a momentum market, here's the data for your proof. This is not a market to chase stocks in. When there's no stocks in the momentum filter, don't go chasing stocks, man. Stop the momentum strategies. There's none to be had.
None. No.
Dennis is deleting all his momentum strategies from his database.
Completely on hold until Tim Quas comes up back on next Monday and tells us there's 100 stocks in momentum portfolio.
Right.
Wow. When's the last time there was none in there?
In March. Back in March, there were none. During the bank financial crisis. The bank crisis, I guess that's redundant. So we had a couple of days where we hit none back then too. Right. And again, it's a statistic, but traders, if you have something that says, well, don't chase momentum, you might get lucky and something does well that you're watching, but the probabilities are stacked against you. And so, you don't take risks that aren't justified by probabilities. I would look at this and say 0 here, 18 in here led by healthcare. If I'm going to trade something, I'm probably going to trade low volatility healthcare like Cigna. Cigna is the most volatile stock in the low volatility portfolio at 2.2%. Well, so there's an opportunity. If Cigna is down a little bit today, it's a great opportunity to produce a 1 to 2% return in, let's say, 3 days, maybe right into the Fed meeting. So here's what we're looking at. Very stable supply and demand, and supply has dropped sharply 1, 2, 3, 4 days down. Well, there's a probability that you get a gain in that. But what this data is telling you is that big institutional money that has all the inputs, all the global macro inputs, is saying we need to cluster in large, stable stocks. Okay, well, let's follow that. And maybe there's some opportunity to pick up small gains. This isn't going to be, trading Roblox or GitLab or stuff that will move 4, 5, 6%. That trade is over for the moment. Now, when it's back, we can pursue that. But right now, this is what the data would indicate.
Where should we go looking underneath the hood?
Well, there's one. If I have a Benzinga September 18 portfolio, look at this, 4.8. It's not even 5.0. Demand in the market is not enough to sustain prices. So at 5.0 on a 10-point scale, it means there's roughly balanced buying and selling. So then prices will be driven by supply fluctuations. At 4.8, I don't know what happens today. New options are trading today, and it can distort the outcome. But statistically, you would say, well, the market continues to have a downside bias. Here's the Benzinga September 18 portfolio. Only I just put 4 stocks in here, led by fast traders, machines with an investment horizon of a day or less. Healthcare is the leading category. Notice that demand's very level, supply is falling. That's what you're looking for right now if you're going to be long.
What's in there?
I'm still tempted to be short the market because of these conditions. But there you go. PXD and Energy, very nice, big, stable stock. Opportunity to produce, a modest gain. Its volatility is only 2%. So, for instance, if it starts out flat and you have a chance to buy that stock and maybe make 1%. But if you do make 1%, take the gain. Just be happy with that. AerCap, they're a supplier to the airline industry. 2.2% volatility. It's the smallest of the group. Here's Cigna, 2.2% volatility. So you're only after about half that because machines will give you half of it, roughly. And so what I prefer to do, it doesn't always work out this way, is if they're down half, one of those is down half its volatility today, I probably buy that because in the next 2 days, the probability that it regains that half of the volatility is very high statistically. There's a 75% chance of it, still 25% risk, but that's what I'm willing to take. So AstraZeneca would round us out there. So that's, to me, what you look at. And otherwise, be very, very careful here. There are a lot of, tectonic plate shifting going on here as we finish off September options expirations.
All right, so let's do a little bit of something special for you guys. You guys smash the like button here. We're going to do a little bit of some ticker time with Tim Quast also joining us. So you guys in the chat, drop some tickers. We can take a look at a market structure edge. Joel can make a technical comment, and then Dennis and I will try to add on some story. How's that outlook there? You guys got the best of all worlds here. So let's get after it.
I'm going to give the first ticker. One, I don't know if you have in your system yet. Do you have ARM Holdings in there yet or not yet?
Probably not. It's
because only 3 days of data.
It should be in there. It'll be in there sometime today. I've talked to our chief data engineer this over the weekend. Said there are 2 to add, but we need a minimum of 2 days just for it to manifest. And really, we like 10 days to look at patterns.
Okay.
So I can't quite do it yet. So
let's do NVIDIA to start then. Let's do NVIDIA.
You're reading my mind, Triple D. Yeah.
The chat wants to hear more. We talked NVIDIA a bit off the hop. We're concerned about the breakdown through 450, but let's look in the data and see what the data says.
Right. So the time to buy NVIDIA, to me particularly, it's right when it hits 10 and supply declines. So that's where you can get your gains. And the moment supply starts to rise or demand falls, you're not going to capture it perfectly. That's the time to leave. And right now it's 1 and supply is 52%. I would prefer to see those things reverse. And it's a great illustration of how, everybody on the planet in some form or fashion, I'm overstating it, but owns NVIDIA because it's one of the most liquid, largest stocks in the U.S. equity market. But you can't beat the market by owning stuff somebody else doesn't. You just have to own it at different times. And so here's your key. Don't own it when demand is falling and supply is rising. Just park your money where you're earning 4.5% in cash, and then buy it when demand rises and supply falls. And if you do that, you will consistently outperform your competitors.
So demand is at 1 right now. Do you start buying when it starts to go to 2, 3, or do you wait until it still gets up to 5?
NVIDIA, you can buy as soon as demand rises. I mean, if you want the absolute best probabilities of producing a return, when a stock like NVIDIA, which is a momentum stock, hits 10 and supply ticks down like it did right here, the probability of producing a return within 3 days is nearly 100%. Now, that means you still could go wrong. If there are other things going on, options expiring, if they report earnings, if there's some kind of major Fed decision, those things can affect those outcomes. But that is statistically optimal. You're very high probability, but you could buy it on the uptick in demand, particularly if supply doesn't move. Demand rises, supply does not, price is going to move. It's just a basic economic principle.
What do you see on the technical side, Joel?
I don't think, regardless of supply and demand, I don't think there's anything that could get me. There's nothing technically telling me to buy this stock. And the reason I'm saying that, nothing in here. Number two, I mean, look at all these green monthly candles.
Yeah.
I mean, come on.
It's a nice thing to focus on.
Yep. And then now you're going to get a red monthly candle, right? I mean, unless something really changes here, you had a red candle, you had another red candle, then another red candle. And then you had 3 out of 4. So if I had to pick, to me, I'd ride. If I was long, I'd be hoping for 450 is going to be major resistance, but that's $20 away. But 400 looks like this thing has a date with 400.
Richard Williams wants to take a look at Pfizer. What about Pfizer? That's an interesting one to maybe take a look at. I'll go to you first, Tim. What's market structure edge maybe say on Pfizer?
All right, so 30-day supply-demand view here. That's what this is. So if you've never seen this before, price is here, top gray graph. This is the algorithm called demand. And Pfizer is a large cap value stock. So it spends a lot of time at 5, and then supply is short volume. Again, I wouldn't own Pfizer. It's a 1. This is a good sign. If demand rises, that's a good time to buy. But this would tell you to leave, right? So if it's a 5 and it drops to 4 and supply has jumped above the trend, you're out. Just take your gains and wait for those conditions to reverse. So we only need one thing. We need demand to return to 5. Then I would buy Pfizer. Right now, I would not.
Eli Lilly. Let's just stay in the same sector here because this has been moving and moving and moving and moving and moving and nonstop bid from when me and Mitch liked it back at 320. It's got to $600. Momentum was just so high on this thing. It had a bad day on Friday. Does that change anything?
Well, here's why it has done so well. It's never been below 5 in this 30-day period. We could back that up too. Here's the momentum stretch where you had insufficient supply, very strong demand. That's what drove the price. And it still stayed strong, but here's what happened right into options expirations. So as we were heading into options expirations, this short, what is it? It's a short bet. It's not. 52% was as high as it got, but you could say that. There was a short bet into options expirations. It's unwinding. It's not bad. If you own it, I'd stay in it because demand and supply are diverging. In fact, this is kind of an ideal time to buy. When something hits 10 and supply falls, this is like NVIDIA. When those conditions exist, you have almost over 90% chance of producing a return in 3 days if you're long that stock. So that's really good. You say, well, why wouldn't that show up in the momentum portfolio? Because the momentum portfolio looks for moves of greater than 3%. Eli Lilly doesn't have that much volatility, and that's why. But that's really good.
We've been on the line with Tim Quast on a Market Structure Monday here, giving us a great outlook on the markets. Tim, thank you. We'll be dialing you up again in, I believe, in a couple weeks.
All right. Look forward to it, guys. Good to see you. Have a great week.
All right. Like always.